Pantheon AI presents Trump's 50% India tariffs, shock markets, oil inventories crash, CoreWeave stock plunges. Welcome to the PAI Morning Briefing. I'm John, your host from Pantheon AI, and today is August 27th, 2025.
Good morning, John, and a big good morning to everyone tuning in. I'm Sarah, and I hope you're ready for a deep dive into what's moving the markets today.
Absolutely. There's a lot to unpack. Let's get started with a quick look at the market overview. In equities, the S&P 500 is sitting at around 473.9, which is up about 0.18%.
You know, it seems like a modest gain, but with the S&P, even those small ticks carry a lot of weight, don't they? And it looks like the Dow is following a similar path, climbing to about 510.5, a gain of 0.2%.
Right. And not to be left out, the Nasdaq is up about 0.1%, trading near 547.4. But the real jumper this morning seems to be the Russell 2000.
Oh, definitely. The Russell is up about 0.67%, sitting at roughly 369.91. That's a more notable move for sure. And what about the crypto space, John? Always a bit of excitement there.
Well, the excitement continues. Bitcoin is trading at approximately 137.1 with a small uptick of about 0.3%. But Ethereum is having a stronger morning.
It really is. Ethereum's up about 1.03%, reaching around 648.7. It's fascinating to see this constant interplay between traditional equities and these emerging digital assets. It really is the pulse of the modern market.
That's the perfect way to put it. And speaking of that pulse, there's this underlying theme of cautious optimism today. So what's really driving these moderate gains we're seeing across the board?
Well, it seems to be a mix of things. But one story that's impossible to ignore is the impact of tariffs. Specifically, Trump's new 50% tariffs on India.
Right, and even though we don't import as much from India as, say, China or Mexico, these levies are starting to be felt. The text I read described them as unexpected guests at a dinner party. Uninvited, but impossible to ignore.
That's a great analogy. It really captures that feeling of getting a bill for a meal you didn't order. And it's hitting some very specific sectors, right? Like clothing, jewelry, and even shrimp.
Exactly. And it's stirring up a lot of debate. Some see it as a strategic move, while others worry it's just adding friction to global trade. For consumers, it could mean slightly higher prices on some goods.
It's always fascinating how a big geopolitical policy decision can trickle all the way down to the price of your favorite shrimp dish. So, shifting gears a bit, what's happening in the energy sector?
A lot of buzz there, especially around the weekly crude oil inventories. The latest data shows inventories fell by about 2.4 million barrels. That's a much deeper drop than the estimated 1.9 million barrel decline.
Wow, that is a significant difference. And what about gasoline and distillates? The numbers there can sometimes tell a different story.
They're a bit mixed. Gasoline inventories slipped by about 1.2 million barrels, which was actually less than the 2.2 million drop that was expected. Meanwhile, distillates saw a reduction of almost 1.8 million barrels when a build was actually predicted.
So it's a complicated picture. I know those numbers can be a bit dizzying, but I love the analogy of the energy market being like a giant orchestra. When one instrument is louder than expected, like that crude drawdown, it can throw the whole performance off balance.
That's it, exactly. It's all about supply dynamics, refining activity, and even seasonal demand. Now let's talk about something for investors who might be a bit wary of all this individual stock volatility. ETFs?
Yes, I've seen so many articles lately with titles like, "Think the S&P 500 is too expensive?" Check out these ETFs instead. It seems there's a real renewed interest in them as a way to get broad market exposure without riding the individual roller coasters.
It's that classic mantra of diversification, isn't it? The articles are basically offering a buffet of options for investors who prefer variety over a single dish. It seems a lot of people are picking up their forks right now.
I like that. A buffet of options. And speaking of roller coasters, what's the story with CoreWeave? I've heard there's some drama in the AI infrastructure space.
There is. The company's stock has taken a notable hit, with its shares trading down amidst concerns over losses and mounting debt.
But there is a silver lining, right? I read some analysts think that if CoreWeave can prove the bears wrong, its stock could rebound to as high as $116. Is that right?
You heard correctly. $116. So while the market reaction is chilly now, There's this undercurrent of optimism that good news could be around the corner for what many call a best-in-class player in AI.
It's a classic case of short-term pain for potential long-term gain. Like a budding athlete who has a rough start but shows enough promise to make it to the championship. Investors seem to be weighing that possibility very carefully.
Perfectly said. And that brings us to the broader market commentary. All this chatter about the S&P 500 being too expensive really reflects an underlying anxiety about overvaluation. It's forcing investors to get creative.
And that creativity leads them back to things like those alternative ETFs we mentioned. It's a sign of market maturity, really. Instead of just riding the index, people are looking for smarter, more diversified strategies. Almost like a chef offering a tasting menu instead of a single, heavy course.
Which is especially important when critics are worried the market is too exposed to the whims of the tech sector. That brings us back to the coexistence of the old and the new, traditional equities and digital assets.
Exactly. Bitcoin's modest gain and Ethereum's stronger climb this morning show that crypto isn't just a quirky alternative anymore. It's part of the mainstream dialogue, and some even argue it could be a hedge during uncertain times.
And all of this, the tariffs, the energy shifts, the tech volatility, has huge geopolitical implications. It's like a game of dominoes. A tariff move in the U.S. can set off a chain reaction, forcing companies in Europe and Asia to recalibrate their own supply chains.
It really highlights how interconnected every sector is. The energy story isn't just about oil barrels, it's about geopolitics. The tech story isn't just about innovation, it's about regulation and finance. It's all one big, complex tapestry.
Which leads to the big question on every investor's mind. What's the outlook? Are tech stocks overvalued? Is the market just transitioning? It forces strategies to be more flexible and adaptive than ever.
And it all comes down to risk management. Every headline we've discussed today emphasizes that risk is evolving. It's not just about hedging. It's about anticipating changes across the board. Regulatory, geopolitical, and technological.
And sometimes just having a sense of humor about it all. Because let's face it, the market can be as unpredictable as a comedian's punchline.
So true. And you know that surprise drawdown in crude oil inventories, coupled with the broader energy transition conversations, makes you wonder, could this be a signal for a bigger pivot towards renewables?
That's a fantastic question. It forces investors to balance immediate returns with long-term sustainability. It's clear that all these threads, tariffs, energy, tech, crypto, create a complex environment where every decision has global ripple effects.
So, John, if you had to step back and offer some predictions based on all this, what would you say?
Well, based on today's data, I'd predict the coming weeks will be marked by that same cautious optimism and a lot of strategic repositioning. I think we'll see a continued strong emphasis on diversification, mixing equities, ETFs, and digital assets.
And in the energy sector?
Given the inventory drawdowns, we could see a potential rally in energy stocks if that supply tightness continues. But, as always, with every potential upswing comes risk.
You know, sometimes I have to laugh. Is it the market talking to us? Or are we just overanalyzing every tiny movement? It's like, if only my morning coffee could predict these trends. One sip for tech stocks, the next for energy.
If only. But before we wrap up, I want to leave our listeners with a few questions to think about. First, how might these shifts in trade and the India tariffs affect your portfolio? Are you prepared for potential supply chain disruptions?
And on energy, do you see the inventory numbers as an opportunity, or does the potential volatility make you more cautious? And finally, as digital assets keep growing, have you reevaluated how crypto fits into your own strategy?
Great questions to mull over. In closing, we've covered a huge range today, from modest rallies in stocks and crypto to the big headlines on tariffs, oil, and the debate over diversification with ETFs.
We've definitely walked through the complexities of policy, sector challenges, and global ripple effects, all while trying to keep a sense of humor about it.
As always, this is just a snapshot. We encourage you to stay curious, keep researching, and feel free to reach out to our AI co-pilot at Pantheon AI for more insights. Learning shouldn't feel like a full-time job.
Thank you so much for joining us on today's PAI Morning Briefing. We look forward to exploring tomorrow's market with you.
Until then, keep asking questions, and may your investments be as diversified and robust as the stories we've dissected today. Have a wonderful day, everyone.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.